All right. Hey, everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis. I'm sorry that I'm running behind today. But anyway, let's get this thing started, shall we? Really quick. Let's just jump right into this. And let's not waste any time. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, cool. Let's say hello to everyone. All right, we got Dom, good to see you. Armin, Lad, Steen. All right, Nima, Steen is in France today. Cool, Steen, but for work though. All right, thanks for letting us know. If you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Okay, so if you're new to this stream, welcome. Let me explain to you really quick how this works. So first, I'm going to go through the economic calendar. There's really not a whole lot to talk about this week. Then we're going to talk about the Bitcoin chart situation and the title of today's stream, which is continuation or reversal chart analysis, right? Which one is it? So we're going to talk about that, and we're going to talk about the variety of mindsets or ways that you can look at a situation like this. It's very important, especially if you're a day trader versus a swing trader. Then we're going to look for trade signals with the Trade Scanner Pro. Okay, again, I like to demonstrate the Trade Scanner Pro on a 1-minute chart. Maybe we can find some trades today with Bitcoin moving around a bit. We can take a look, see how that works, and we can demonstrate some examples. But Steen, by the way, has shared an interesting some of his. He shared a table of his recent trades. He entered into the TradingView contest. There's a TradingView contest, in case you don't know, that's coming up on August 1st. It's where you open up a practice account with TradingView, but you have to be a paid member of TradingView in order to participate in this contest. And you should go to TradingView and just check the details, but you win all kinds of prizes and stuff. Hey, Sean, good to see you. And you're limited as to what markets you can trade. And Steen was sharing some of his trades for practice, and he's up a decent amount of money. They give you a $250,000 practice account, and I think he's up like 30,000 or something like that in that account. It was something along those lines. But he shared it in the Discord channel, so you could see it there. And it's interesting how he went about going about that, like what he chose, the criteria he chose to follow. We'll talk about that in a moment. And I think it's a great example for beginners. Now, so let's move along here. Let me real quick talk about the links in the description. If you haven't checked the links, please do. If you'd like to try the Trade Scanner Pro out for 14 days, you can do that for free. There's a link in the description. Second, if you'd like to join the Discord community, there's a link for that as well. There's a free channel there. A lot of information goes through there. Plus, you can ask questions. Also, if you'd like to see a trade idea from the Trade Scanner idea, the concept of the Trade Scanner, we have the Trade Scanner bot, and it sends out an email once a week, and it sends out a trade idea. It could be in a Forex pair, a coin, or a stock. It rotates each week. You can sign up for that. You receive the email. It gives you the entry, the stop loss, take profit, and all that other stuff. And it gives you trend following trades on a larger time frame. So if you want to get an idea of how it works, that's a good way to do it. That's free. Also, if you would like to sign up for TradingView, again, you'll have to in order to participate in their contest, consider using the link in the description. It's an affiliate link, and Steen gets a cut of your fee, but it helps him. It goes a long way in helping him support the community because he's done a lot of work here. He's made the Trade Scanner bot and the Trade Scanner script possible. So, if you want to show him some appreciation, that's a nice way to do it. If you're interested in trying out another exchange like Bybit or MEXC, and you're non-US resident, or you're a US resident who doesn't mind using VPNs, you can consider one of those as well. Those are also affiliate links for Steen. It helps him out immensely. So consider that also. And if you're not interested in any of those things, but you'd still like to support the community, there are 2 wallet addresses. One is for Polygon, one is for Ethereum, and that goes straight to Steen to basically help him support the community. And by you helping him out, you're helping me out, and you're helping yourself. So consider those things. Anyway, thanks guys for all that. Now let's move along to the next thing. Cool, Sean. Good to hear that. Good to hear that feedback. And again, there's always more coming. Steen works hard on those updates and all that stuff, and there's always more coming. So thank you for your feedback there. All right, let's get into the economic calendar, shall we? And today I want to test you guys. I like to do that every once in a while. And I want to ask you guys, what do you think is important in this week's economic calendar? And while you guys are coming up with that, there's really only one event that I'm looking for here for this week. There may be other events on the calendar. And this is a good exercise, especially for beginners, because you should be looking through the economic calendar each Monday, and you should see what is going on that can affect the markets in a big way. Anyone want to share what they think this week is all about? Okay. FOMC meeting. Okay. When is that? You want to share more details on that? Busy week on the calendar. Right. Okay. So there's a Fed decision, right? That's typically when? Wednesdays at 2 p.m. Eastern time, the rate decision comes out. And at 2:30 is the press conference. That is certainly a market mover. That moves the dollar. It moves the indices. It moves everything. So you want to definitely be aware of that. Okay. What else? Anything else? Anything else? So you guys are on it. Okay. Now, Sean mentioned something important here. We have the quarterly reports from the stocks. Any major stocks coming out can have a serious effect on the market, right? If there's some kind of negative surprise or positive surprise, there can be a dramatic move in the S&P or in the NASDAQ and things like that. And that can have an effect on things. So certainly want to be aware of the big names, if there are any big names. I don't know. I haven't seen the calendar for the companies this week, but you want to be aware of the big names. Sure, there's lots of small names. If you're involved in those particular stocks, yeah, you should know what's going on, but those aren't really major market movers. But if you see something like Microsoft, Amazon, Google, a major tech stock or a major pharma stock or a major, you know what I'm talking about, a major industrial stock, it can have an effect. Sean says SoFi, PayPal, Pfizer. There you go. All right. So there's a bunch of, Pfizer is a big one. BP, Procter & Gamble, those are big. Merck, Microsoft, Starbucks, a lot of big names there, a lot of big names. So that can have a general effect on the market. So you want to be aware of that and just see those outcomes. You're not trying to trade them. You just want to see the outcomes again and see how that affects things, because it can change things, especially if someone comes out with a really good report or a really bad report. Anything else? What about on Friday? Anything unique to Friday, which is the first Friday of the month? Unemployment, Sean says. There we go. Non-farm payrolls, NFP. Don't forget non-farm payrolls. It's the first Friday of every month. So you have the FOMC, you have a bunch of company reports, and you have non-farm payrolls. Those are pretty heavy-duty items this week. Now, understand that when you're going into those reports, volume can get very erratic, right? I would suspect that going into Wednesday, like tomorrow, is probably going to be slower toward the afternoon and uneventful, because no one wants to take any big risks going into the FOMC. So as a day trader, this is very important. If you go in, you trade the open, that's going to be where all the action is. Outside of that, don't waste your time. Same with Wednesday. Usually like the day of like a major report like FOMC meeting or non-farm payrolls, they're very wild and erratic days, and they're good days to wipe out your accounts. So don't don't overdo it on those days. Let the market come out with the answers and then adjust from there. So thanks, Sean. So again, pretty heavy week. Now, one thing I want to mention about about the general environment when we're talking about economic reports and news and stuff. Understand, we are now going into August. This is the 4th week of July, right? And by the way, guys, we have to have a student meeting this week. I'll probably do it like on Wednesday or something. We'll do a student meeting. I'll put it on YouTube. I'll make it available for all. So make sure you guys watch out for that. But we're in the 4th week. And now we're going to be going into August. Hey, Alex, good to see you. August is typically the worst month for the markets as far as volume goes. And in particular, weeks 3 and 4 of August is basically the bottom of the volume right? Average volume. Now, people may say, well, who cares? Well, it has an effect on market movement, and movements can be muted. They could be erratic. It's harder to reach take profits. Things take forever to unfold. It can be very frustrating and very aggravating to deal with, especially on the day trade timeframes. So in a month like going into a month like this, I mention this because the proper mindset is very important. The proper expectations. Be more selective. Trade less. Your goal is you should be trying to trade less. If you can make something, take it and run, because as volume gets lighter and lighter, it gets harder. It doesn't mean that there won't be any movement. And it doesn't mean that there won't be days where we have a volume spurt or something like that. But in general, it's going to be lighter. Okay, I talk about this all the time, but please keep that in mind, the seasonal volume pattern. Now, weeks 3 and 4 of August are typically the bottom, and we don't see normalcy in that area usually till October. Maybe this year maybe we'll see it earlier because we have elections coming, but typically October is when you start to see more of normal volume. And why is that important? One reason, especially if you use a TradeScanner Pro, is when you get back to normal volume, random trades have a tendency to reach their take profits more. Why is that? Because there's more movement. The ranges are greater. Right now, random trades, right? You don't know if when you take a trade, you don't know if it's going to be random. It could be a random trade. Our goal is to try to minimize those. But in a slow environment, you're going to be dealing with a lot with struggling to reach that take profit, which again can drive you nuts. So please keep that in mind. All right, enough ranting on the volume. Let's talk about today's chart, shall we? So hopefully you guys read my TradingView article yesterday. In my article, as you can see here, let me make the chart bigger. Okay, there we go. All right. In this chart, you can see here, and by the way, this part is geared more towards swing traders and people that are looking at bigger picture stuff. This can be helpful to day traders if you're looking for just general context to help you shape your expectations for the smaller time frames. But let me explain something here. So as you can see, in my illustration are these little lines over here. This is the scenario that I anticipate for the week. I am not always right. In fact, 2 weeks ago, I was calling for a short over here. And as you can see, that wasn't a good idea. But we never got confirmation. The whole key to these illustrations is confirmation. Novices don't seem to like that idea. And people, usually when I get criticized by people who have no idea what they're doing and really have no business criticizing me because they don't understand even what the problem is. So you have the situation. If you notice, my illustration was green. I was looking for a test of 70K area first. See that, this little upward movement? Now, why was that? Because yesterday when I was writing this thing, even though we were fooling around in a resistance area, this momentum is strong. This momentum is generally strong. So I anticipated that it was possible before we reverse, if this resistance is going to take hold, we're more likely to see some sort of attempt at the high first. That's why I drew this little upward line first. Now, the reason why I'm focusing on this and I'm pointing this out is because as a day trader, this could have been very helpful for you. Because at the time when I was writing the article yesterday, we were fooling around here like this. We were fooling around in that area, something like that. And this thing, what was that? The open there was 67. I mean, and this thing has a high of 70,000, right? The high of this candle is 70,000. So we were fooling around in the 67s, 68s. There was a 2,000 point little move over here before it turned red and gave the entire thing back. That 2,000 point move has value for day traders, especially if you're using something like the TradeScanner Pro, as Seinfeld would say. So when you have something like that, this is a situation, not even going to the 1 minute charts yet, just looking at this time frame at the time. Let me just erase this candle here for a moment, because basically it looked like this, right? And that current red candle was still it wasn't even red yet. It was still developing. So it looked like this. When you're looking at a chart that looks like this, right, and I'm drawing this, I'm basically saying that this thing has some day trade potential. That's the way you should be looking at that. 2,000 points, there's plenty to do in a 2,000 point move. In a situation like that, most likely you would be looking for continuation patterns with your TradeScanner Pro, which is the standard mode. I'm going to talk a lot about that today because when Stian showed that example in the channel, it made me think about something and why people may be confused. And it's something I want to address today. And I will probably spend the student meeting on the same topic. Now, so there was a lot of opportunity here, especially if you have a confirmation tool like that can help you find those continuation patterns. In fact, we could take a look at the 1 minute shortly and see what was actually going on there. All right. But now, since then, let me turn this off. Since then, this thing basically tapped 70,000, and look at this candle. When we see this, we must zoom out now and think in swing trader mode. As a trader, to begin with, you need to be evaluating multiple time frames before you look for trade ideas. You should kind of get a sense of context. It's a good idea to get a general idea, right? Then after that, you can decide, well, okay, I'm going to look for day trades or swing trades, which is the first step of using the TradeScanner Pro. You must decide that part in advance. But when you're just doing general analysis and just looking around, what's going on in Bitcoin today, and you pull up your daily chart, you're looking for trend and you're looking for levels. That's always going to be the case. Now, I pointed my arrow, right? I drew this arrow over here, pointing an arrow to an arrow. Can anyone tell me what's special about this area? Can anyone tell me what's special about this? Let's see if you guys pay attention. I'm going to erase the arrow just to avoid confusion. Can anyone tell me what's special about this little section I just highlighted here? And why we should be thinking in a particular way? Anyone want to chime in? And Stian, you're allowed to chime in also. A lot of times I tell Stian, let the beginners answer because he knows all the answers. Anything special about this area? Anyone want to guess? Savali says resistance. Resistance, Alex says. Previous support, new resistance, Sean says. Okay, you guys are seeing part of it. Now, yes, this entire zone, when I zoom out of this, and you guys this is a range resistance. This entire area, see this area? Look how many times Bitcoin rejected this general area. So when it reaches this general area, which is basically 68K to 70K, right? The higher 60s into the low 70s, we should automatically be thinking this is an area for selling activity. Unless it proves otherwise, unless it breaks out strongly, we should not be thinking, hey, it's going to go to 80K, it's going to go to 100K, it's just getting started. Right? We should not be thinking like all the other clowns and the herd mentality people who just react to what they see. You should be saying, this is a high risk area for longs, right? The general area. So you guys got that correct. It doesn't mean you jump in and go short. It just means that your expectations shift and you say, okay, this is an area where selling is likely to impose itself. I should be prepared for that. If I'm going to be going long, I should probably be only going long on very small time frames, like day trades. I should not be taking swing trade longs at such a level because the risk is extremely high. This thing can easily pull back to 60K from here or 64K or whatever. It can easily do it. Why would you take that chance, right? Now, here's the thing that I was trying to get to. We cannot know in advance how many shorts, right? So all we can say is it's an area that attracts selling activity. People are willing to sell here. There's obviously an absence of buying activity in this general area. So that helps us set expectations. We're not thinking in absolutes. We're not saying, oh, it's going to turn here and it's going to go to 50K. We're not saying that either. We're just saying this is an area that's high risk for longs. All right, so that kind of gives you a piece of an argument. It gives you a piece of the puzzle. But now, more importantly, this is what I wanted to point out, and this is what I was trying to point out with my arrow. This formation is what? What am I pointing to with those arrows right there? Anyone want to answer that question? Steen, you're also free to answer that question if you want. What am I pointing out here? So you guys got the general resistance correct, but there's something even more than that. This is beginning to compound now, right? General resistance, and then we're getting something else. Okay, no problem. Oh, Alex knows, but he'll let the other people answer. Okay, no problem. What is that? What am I pointing to? What is this area right here? This is really important. You guys should know this. My students should know this at least. What is this? If you're a beginner and you're not a student, feel free to say, I don't know. I'm not going to yell at you. Fake out, Sean says. Failed high. Sean got it. Yes. This is a failed high. We have a high followed by another high attempt. And people may get fooled by this because they'll say, oh, it's a higher high. This is not a high. Technically, it's a higher high. Yes, but it does not count as a higher high when you get a candle like this. I was suspect over here on this pin bar-like candle, which I wrote about in my article. I said, yes, we have that situation, but the new candle was an inside bar at the time, and we weren't clearing anything yet. So I figured, okay, the momentum is still intact. That's me thinking like a day trader. But as a swing trader, right, before we had this red candle, you should be suspect that such a candle can appear. Now, it's easier now because we have, and why should we be suspect of this candle? Because it's a failed high location. That's why. You have a high followed by a failed high. It's similar to a double top. It just throws people off because it goes a little further. The key to this, though, is the confirmation. We don't know if it's going to do this. This thing could have closed strong. Here's what it could have done. It could have closed strong at 70K. And then the next candle could have done this. That could have been possible if there was an appropriate catalyst behind it, but that is not what the market gave us. We have to go by what the market gives us. Instead, the market gives us this bearish pin bar, which is also an outside bar. It also established the failed high, and all of this occurred in a location where this type of price action is highly probable. So do you see how all of those puzzle pieces come together? This is what confirmation looks like on the bigger picture. So if you are long, or you got long recently, because maybe you followed one of these clowns that told you it was just getting started, and you were afraid to miss the breakout, okay, maybe you were whatever. Maybe you reacted. And now you see this. This is time to get out because you're taking immense risk. We don't know how far this will pull back. My illustration says to this little support area here, as you can see, I have this little bounce here, and it's trying, as you can see, it's trying, but this is not really, since we broke this level a couple of times, this isn't really a heavy duty level. It may break, and this is the next support here. So it's very possible that even if you try to get this little bounce situation, it may give you the lower high and it may start working its way back to a 64K. Do you want to take that risk if you just got long? I don't think it's reasonable. You could be risking 5,000, 8,000 points, 10,000 points. If it breaks that level, it can go even lower. It can start testing the 60K area, which is over here. Again, I don't make forecasts because there's no way to know where the market is going to be in the future. All we can do is project scenarios or arrive at a number of scenarios and say, okay, we're going to narrow the range of these scenarios and I'm going to see which one the market confirms. Now, when you do all of that, now at least you have a greater chance of being on the right side, or at least making a more objective decision. You may not want to trade at all. You may say, I'm not doing anything here. I don't like it long. I don't want to take it short, whatever. No problem. But at least you know to step aside because you could make an objective decision because the market is giving you the proper information. The information, if you notice, is coming straight from the market. I don't have any oscillators on the bottom of the chart. I'm not following news, wasting my time and my attention with all that garbage, all the retail garbage that's fed to you. The candles tell the story, the confirmation. The price structure tells the story. The higher lows, the higher highs, the lower lows. So you're looking at price structure and you're looking at candles to confirm, essentially, if you want to really simplify it to two components. And support and resistance levels obviously are going to be important with the candles as well. So we can isolate three components: price structure, support and resistance, and then confirmation from the candles. Does that make sense? Okay, so ASP says here, lower high. This is not a lower high. I mean, relative to this high, it's a lower high, but don't make the mistake of saying, this is a lower high relative to this high, so we're in something bearish. Don't make that mistake, because a lower high doesn't necessarily mean that we're going to get some sort of major reversal here. Just keep your mind open. We're just seeing a start of bearish activity and confirmation on this time frame, which should serve to shape our expectations as the market unfolds over this week, because we're only looking a week out here. I'm not looking a year out or 6 months out. We're only looking like a week or two. That's all we're looking at. We're keeping our expectations inside of that scope. Anyone that says, "Oh, Bitcoin will be here in 3 months," they're just fooling you, fooling themselves. Don't listen to people like that. Do yourself a favor. Now, so to sum this up, basically our expectations right now should be anticipating bearish momentum going back to this support area here, which is around 64K, right? Something like that, 64K. That's what I'd be looking for as the week unfolds. If that level breaks, we're looking at 60K. It doesn't mean we will do it. The market needs to confirm that. So with that in mind, that's going to shape my expectations for day trades and swing trades. Right now, at this current level, at this candle close, if you were interested in a swing trade short, this is the place to do it. Break of this low. What is the low here? 66,400. So next candle takes out that low, you have yourself a standard signal. You can use that as a point of reference. Of course, your risk is going to be your risk is going to be defined by up here, way up there. So you're looking at about 3,000 or 4,000 points of risk. This is why using something like the TradeScanner Pro can really help you focus in on price action inside the candle to find some sort of price action inside the candle where you can define a smaller risk. I mean, do you really want to take 3,000 or 4,000 points of risk? I mean, you can. You just size smaller, but it's not necessary when you have a confirmation tool like the TradeScanner Pro. The point is, though, your mindset should be in line with what the market wants to do. And that's what it's saying. Now, is it possible that the next candle could be green and just come right back up like that? Sure, it's possible. And then that would cancel out this whole bearish idea that I'm presenting here, right? My bearish idea, I'm saying we test 64K potentially. If we get a green candle like this, and then the day after that, we take out we take out that high. We do something like this. That cancels out the whole bearish idea. At that point, this would be a higher low, and I would be anticipating the higher high. That calls for mindset adjustment. This is one of the hardest things, especially for beginners, because everyone, when a forecast is made, you want to get married to it. You want to stick to it because you don't like constant change. It's not comfortable. Just naturally, it's not comfortable. But the market is always changing. So we have to be prepared to adjust for that if the market shows that. That's how we adjust. We let the market lead. We let the market speak. And then we listen. We're always passive. We are always the listener. I never claim to be right. The market is always right. That's how I always think of this. Whenever I take a trade or I make an analysis or I call something, I always respect the fact that I can be wrong very easily. In fact, I like to think I have a 50% win rate typically, which is random. And random, you can make money with that if you understand what that means. All right, so are we clear on this? I don't have to keep talking about this over and over again. I think I got the message across. So we know that the favorite scenario is the pullback to 64K. We know we can get an alternate scenario if we get a green candle that follows right up and goes for the new high. This is especially important for day traders because it's going to change your expectations. Be prepared for that. All right, let's now move on to the Trade Scanner Pro. I want to spend some time with this. So I'm going to change the charts up here a bit. All right, we're going to change this chart that I'm on. We're going to change it to Bitcoin Perp, which is the perpetual futures chart. It doesn't matter which one you use, but I like to use the MEXC one simply to match the chart that I have on the right. And this is a daily chart. We've analyzed the daily chart. So for these purposes here, we're going to switch to a 1 hour chart, because remember I said earlier, we can use the Trade Scanner Pro to use smaller time frames to figure out how we want to participate in this bearish scenario while keeping our risk better contained, or at least better defined, instead of, oh, I got to take 3,000 points of risk. So let me explain to you real quick how the Trade Scanner Pro works. Now, so the Trade Scanner Pro, let me just switch to this, is a trend following momentum reversal system. It's based on criteria that I use to take trend following trades typically. And it works like this. There are 3 steps. First, it identifies the trend. And when I turn the Trade Scanner Pro on here, you'll see that the trend as defined by the Trade Scanner Pro is bullish. It says it right there. So that's the first thing that it does. It identifies a trend. Once it does that, let's say in a bullish trend, it then measures pullbacks. You could say it's basically a pullback strategy. It looks for the pullback. Now, once it identifies a pullback, it measures the momentum at the reversal area, whatever you want to call that, the mean, the average, and it looks for this turn. Once it identifies that turn, which is the confirmation leg, it then sends out a signal in the form of trade suggestions. So you have a stop loss, you have an entry price, and you have a take profit, which typically looks like this. Now, the ratio between the stop loss and the entry price and the profit is 1.5 to 1. And it says it right here. If you look at the script up here, it says Trade Scanner Pro, 1.5 regular. 1.5 is 1.5 to 1 reward risk. So it's automatically set to that. Now, the stop loss amount, again, is defined by price action itself. So in the case that if the Trade Scanner Pro shows you a stop loss of 100 points, the take profit is going to be 150 points higher from the entry. That is how it works. Now, that's a very important point, because if you take these type of trades and you take them over time, like Stian said in the chat room, don't get blind by the losing trades, because if you stick to this system over time and you lose $100 on bad trades, but on good trades, you make $150, you're going to come out ahead, or you're more likely to come out ahead because of the reward risk ratio. Now, some environments, of course, are going to be more supportive of the momentum, because this thing requires momentum. It's a momentum reversal tool. Now, let me point something else out here real quick before I erase everything. That's what I just showed you, is the Trade Scanner Pro in its standard default mode. There's something called counter trend mode. Counter trend mode looks for the signal here against the trend. It looks for the reversal, the momentum reversal here, and it ignores that we're in a bullish trend, and it will call a short in such a situation. Now, when would you use something like that? You would use that, for example, at a major resistance level, let's say 70K on Bitcoin. You're looking for reversals, right? But the time frame that you may be on may be like bullish. It may say bullish. And you're like, well, how do I get bearish trades if the trend is bullish? You simply switch to counter trend mode, and now it'll be looking for bearish trades. So think of it like this. When you use counter trend mode, typically it's to synchronize your smaller time frame trade with the larger time frame trend or situation, right? Let's say your bigger picture trend is bearish. and you want a bearish trade, but when you go to your smaller time frame, the trend happens to be bullish because the market is bouncing a bit. But you want to synchronize with that bearish structure on the bigger picture. On your smaller time frame, you would use counter trend mode. Now, I know that may sound confusing, but today I don't want to spend any time on that because I think that's where people get confused a lot. Stian brought up a very, very important point in his example that he shared in the channel, in the Discord channel. And that is he showed a positive result because he's practicing for the TradingView contest. And he showed a pretty decent result. Meanwhile, half of his trades were losing trades. But he's up like whatever, 30,000, whatever it is. I forget what percentage it is. It's better to look at it percentage-wise. So what is that? Like maybe 10, 15%, something like that. I don't know. I don't have the numbers in front of me. But he just started doing this. He's been doing this like maybe a week or something like that on this contest. So he stuck to, the reason why I keep mentioning this is because he explained, when they asked him, how were you able to do this? He said, I stayed away from counter trend mode, which means he only used it on trend following mode. And I think he stuck to certain time frames. I think he stuck to only the 15-minute time frame, and he was looking for trend following trades. So I think that's a great piece of advice for beginners. In fact, when we first set up the TradeScanner Pro, I was basically encouraging people to only stick to trend following and don't get caught up with the counter trend, because if you use it incorrectly, you will find yourself in low probability setups a lot, because you're going against the trend typically, right? You're going against the momentum of the relative time frame, and that could be very problematic if you don't understand what you're doing. I always tell people there are three types of trades. You have random trades, which could be anything. You have momentum reversal, and you have, which is counter momentum reversal, which is reversal, and then you have continuation. Continuation is typically trend following. Those are usually your higher probability when you have a trend. So let me just point something out. Here's Bitcoin here on the hourly, right? If you notice, the trend here is bullish. If you look, not all the trades were green. There were some bullish trades back here, right? But this one worked out nice. Again, this is an hourly. And at this time here, you know, the market was pulling back and it tried and it had a few stop outs. You're going to get stopped out. But these stop outs are going to be smaller relative to a move like this when you capture a move like this. Now, of course, this gave it back. But if you're using the trailing stop in a situation like this, especially on a smaller time frame, you can get away with a nice little profit. Now, why am I in a 1 hour chart anyway? So let me answer that. What we're going to do here is we're going to try to follow Stian's example. We're only going to look for trend following trades. We're going to see if we could find a trend following trade without getting mixed up with all the confusion of trying to figure out if we are in a reversal situation. If we are in a reversal situation, I'll look for something else. Now, I talk about 5 steps to using the TradeScanner Pro. There's a video on my YouTube channel. It's my most recent student meeting, which I conducted on July 3rd. It's called five Steps to Better Signals. If you're new, I suggest you watch that, because I explain the 5 steps to help simplify your decision-making process to make sure you're using this TradeScanner most effectively. Now, the first step, again, you decide if you're a day trader or swing trader. You decide that before you even get on the chart to take a trade. Now, for today's example, I'm going with the day trade route. Okay, so we're going to be day traders. Second, we have to get context. That's why I have an hourly chart. Typically, when you're looking for trade ideas, you should start with a bigger time frame, and then you should have your smaller time frame, which is where you're going to take the trade. That's going to be your action time frame. But your bigger picture time frame is your context time frame. This is where we gather clues to help us align with the market and synchronize with the bigger picture. So that's why we're on the hourly chart here. So when I'm on the hourly chart, just like I was doing with the daily chart, when I'm on the hourly chart, I'm looking for 2 things. Trend, which again, the TradeScanner has defined for me. It's bullish. But if I had no TradeScanner to tell me that, I'm looking for higher lows and higher highs generally. We have a higher low over here, right? Generally speaking, higher low. Can I get an arrow? Okay. higher low here relative to this low. Basically, yeah, you could say you had some lower highs in here, but the thing is, these lower highs were taken out. We made a higher high eventually, followed by higher low, higher high. Okay, trend bullish. I don't have to keep talking about that. Next, we want support and resistance levels. Now, why am I using an hourly chart? Because if I plan to use a 1-minute chart as my action chart, an hourly chart or a 30-minute chart is appropriate for the levels that I'm going to be dealing with. So let's see, what do we got here? I know I have a support over here. Support and resistance levels can easily be defined using horizontal lines, and you're looking for inflection points, or basically where there was some kind of broader movement. Look at this. There was a peak over here, some sort of high, and that was a pretty significant movement pulling back. It found some support at this little failed low double bottom situation. That's a decent movement going back up, right? So you can note those levels. Also, if you notice, if you had these levels defined in advance, the market reacted here in advance. Imagine if you had these, you could have defined this line once it was established back here, right? Am I telling the future here? No. This is simply called history repeats itself. There was some sort of action here that took place, and the level becomes relevant in the future, because typically what happens in a situation like this, there may have been a lot of longs that took a breakout here, right? They get squeezed, they get pushed out, it becomes exhausted, it turns, it failed to become a resistance again. It broke through, which means the people that probably stepped in front trying to short it got caught, they got hammered, or they're still in it. And when it retests the level, there's buying activity there. That's the phenomenon. And that level was pretty useful. Look at this. That's where the signal came. Oh, how interesting. Off of that level. Okay, good to know. So here we are now, where we're at right now. Notice we have this green column. I haven't explained the green column yet, but basically what that is, these orange candles are what are called heads up. Heads up is something you could change from the control panel here, right? Heads up. This is heads up. Heads up basically gives us a warning that a signal is likely to appear in the next 3 to 5 candles. It doesn't guarantee a signal, but it lets us know that one is coming. Now, how that's useful is not only just visually, if you're watching it, like, oh, okay, a signal is coming soon, but you may not want to wait 3 to 5 hours in front of your chart, which is what this suggests. So what you do instead is you go and you set up a notification on TradingView. Very simple. You pick the TradeScanner Pro over here, and once you click on it to create it, it will tell you, you will get a notification, right? You tell it how you want to receive that, by email, by whatever, by pop-up, whatever you want, right? That comes from TradingView. And that'll tell you when a heads up shows up. That'll tell you when a signal pops up. That will also tell you when a take profit or a stop loss is touched. So it's basically telling you what's happening. It's giving you notifications as these events are taking place. So the heads up, great. Now you know in the next few hours, even if you're going to go grocery shopping or do something else, not be in front of your computer, you know that a signal is coming. It's likely to appear, so you're prepared. And when it appears, you get another notification. Now, when you use the free version of TradingView, which you can do, you're only allowed to set up one notification. When you have a paid version of TradingView, you can set up multiple notifications. So that's an important point. Again, you could use the free version, but there are benefits to using the paid version. If you're going to use the paid version, consider the link in the description, because again, it helps Stian out, and he's done a lot of work. So it'd be nice if you could show him some appreciation. Now, so that's the heads up, and that's why this column is green, because it's telling us that a bullish signal is likely to appear in the next 3 to 5 hours. Okay, that's all nice. That's all great. But what do we do right now as a day trader? Okay, so we know we're near a support level. All right, and we're getting these orange candles, which means a long may be developing. I should probably be thinking on the long side as a day trader. We're near support. We're likely to pop up higher. I don't see any major resistances. We have some minor resistance. So that's going to be, if I take a short, that's going to be aggressive, because look where I am on the bigger picture. The bigger picture, is always what carries all the weight. This is generally a support area. So if I take shorts based on some minor market movement, I'm taking greater risk. I don't have to be opposed to shorts, but understand they're more aggressive and less likely to work out. We're assigning a general probability to them. We're saying that longs have a greater probability, shorts have a lesser probability. Does that make sense? You have to be able to do this. And if that's confusing to you, okay, no problem. Then don't look for the other side. Don't look for those trades. Just look for continuation trades as a beginner. Now, let's just take a look at a 15-minute chart real quick, because as a beginner, that's the time frame you should be working on. So we have our idea here, right? We're generally looking for longs. What does the 15-minute chart tell us? Let's see. Can I get a 15-minute chart here? 15-minute. I'm on a 15-minute. Okay. And I got my TradeScanner Pro on. Notice my trend is bearish on the 15-minute. I just finished telling you all that we want to look for longs. So this is a great example of when, if you want to look for longs at this point, you would use counter trend mode in this area. Right now, I'm going to turn it on just so you can see real quick. I would turn on counter trend mode. And look, there happens to be a trade, a signal that's in play right now on the 15-minute. So if you saw this, it's all defined for you. Your risk, which is 786 points from the entry price. This is not at the entry price right now. So if you take the trade right now, if you were to take this now, your risk is greater. Your risk would be like about 1,125 points, something like that. Okay, which is a lot. It's like 500 points more. So that might not be a good location to take such a trade on this time frame. Meanwhile, your take profit from, let's take it from the price right now, is 827. That's not good reward risk. At this moment, you're risking a lot more than what you could potentially make based on the profit objective. Now, of course, price can go beyond the profit objective, and based on this location, it is more likely to go beyond the profit objective because of the general bullish structure we talked about earlier and all that stuff. If this gigantic move is fizzled out. Remember before on the daily chart, I said, what if tomorrow's candle basically takes out this thing and we start going higher? That would be a sign of that. Right now, on this, if we're working on the 15-minute time frame, yes, we're looking for longs. We talked about that. This is our profit objective, and this helps protect us in case this structure stays intact and we start pushing lows. Like I said before, if you're taking a long, like remember that little uptick that I drew on my daily chart? This is where you would be figuring all that out, right? This is where you'd be looking for trades. This was that uptick that I was basically pointing out. And there are trade opportunities in here with lower risk that help protect you against a move like this, which came out of nowhere. So again, if you're thinking about long, right, and you want to take a small long because you're looking for a small bounce, here it is. This is how it's defined for you. You're not taking 3,000 points of risk, long or short here. Right? So that's one side. But again, that's the counter trend for day trades. Don't confuse this for the swing trade. The swing trade we talked about is a short. Remember that? So let's go back. Let's turn counter trend off because, again, I don't want to confuse people with that. I want to see if we could take a trade on the side of the trend. Right? So again, the side of the trend is bearish. There's no signal here on this time frame on the 15-minute. So let me ask you guys a question then. I got no signal. I'm interested in a long on the day trade time frame, right? Off of this support, if the support could stay intact. What do? How do I go long here? What are my choices? Can anyone tell me? Let's see if you guys know. Because I know like a complete beginner, a novice will just say, oh, this thing sucks. I don't want to waste my time with this. But you're not seeing the opportunities. What would I have to do? Besides counter trend mode is the answer, right? That's why we put counter trend mode in this system. So you have the option of seeing all that. But what if there was no counter trend mode? What would I have to do to go long? What would I be forced to do? And if you could say, I don't know. If you don't know, say it. I don't know. because it's a kind of a tricky question. How would I go long if I have no counter trend mode? UTXO, go to a shorter time frame. Okay, that's a good answer. That's a good answer. But let's say UTXO, let's say you're an absolute beginner and I'm telling you to not go below a 15-minute chart and you're going to listen, right? So you're not going to go to a lower time frame, but that is one way to do it. Go to a lower time frame. But let's say you're not going to do that. How would I do it on this time frame? Stian says, wait. He says set notifications, right? He says, wait. The first word he put here is wait. So basically what Stian's saying is wait for the structure to change, right? If the market decides to change, instead of you thinking it's going to change, you let the market change. It looks something like this, right? This will turn green. This will turn bullish. And then at some point, you'll get some kind of pullback, right? You're waiting. Now, on a 15-minute chart, that wait may be 2 or 3 days for all of that to happen. So I want to give you some perspective on that. If I'm limiting you, like Stian limited himself on that practice account thing that he's doing, and he limited himself, right? Now look at his answer. He waits for the things to line up. So he's letting the market tell him. He's not imposing himself on the market. That is what you do. That's what you should do if you're a beginner. Yes, it requires time to wait, but the good news is you don't have to wait in front of your computer. You set the notifications and then you go about your business and you go do something else. And eventually the market will line up. But if it doesn't, you never get a notification and you go trade something else. All right? You don't have to trade Bitcoin. You're not stuck with Bitcoin. Go trade a stock. Go trade a Forex pair. There's opportunity somewhere. When you have something like the TradeScanner Pro, you can find opportunities. They're very easy to find. All right. Anyway, so that's really the solution to something like that. All right. So I'm glad we got that out of the way. So understand, we have a couple of angles going on here. The bigger picture says go short, which carries all the weight. The smaller picture could be a possible long, right? But the bigger pictures are short. Now, if I want to align with the bigger picture, let's turn on some of these things here. Am I getting any kind of heads up or anything? Let's see. Look at this. This was an attempted long over here. That completely failed. This structure changed the trend because at this time, notice, at this time, the trend was long. Watch this. If I go back to that time and I erase everything from just going back, look at the trend. The trend was bullish. There was a little long over here. Look at that. That probably got stopped out. May have been worth a little something. It got stopped out. The trend was bullish, and then look, it changed. The trend changed on this candle. See that? That candle formed, it closed, and the trend changed. So you have to be aware of that. That's very important, especially if you're going to be more advanced and you're going to be looking for counter trend moves, like in a situation like this. You want to make sure you're going counter to your trend and understand why you're doing that. Again, I don't want to confuse people. All right. So real quick, let's see if I could take a trade. So I'm going to now switch to my 1-minute chart. All right. Because I want to see if I could find a trend continuation trade without using counter trend mode. Let's see. So my trend is still bearish on the 1 minute. Sometimes it could be bullish and I would have to go into counter trend mode for that. There were some continuation patterns here, continuation signals. This one was worth something, but not much. This thing's trying to find support. All right, I'm not seeing much here. Let me explore. How about a 2-minute? Anything? There's a signal on the 2-minute. Look at this. There's a short signal in play on the 2-minute chart. Look at this. So the signal was called back. By the way, I called something similar to this on Litecoin on Friday. I sent it out, but I don't think that trade worked out very well. I have to look again. But for a while, up until yesterday, it was fluctuating around its entry price for like days. It was an hourly chart. Now, so look at this. This is a 2-minute. Look what's happening here. The short was called here. It popped up a bit, never went to the main stop. The full stop never went there. Gave some more warnings, but look at the trailing stop. The trailing stop, this is an important factor. Now, Stian said he wasn't using the trailing stop for his example. He was just using the entire stop. If you use the trailing stop, it has cut your risk to like a fraction of what it initially was. That's a very important part of the TradeScanner Pro. Your initial risk on this was 242 points. This is on a 2-minute chart on Bitcoin. Your risk went from 242 points to 47 points. Okay, right? Assuming you took the entry price. Now, this thing is a little bit beyond the entry price. I'm going to try to take it anyway. I'm going to go with that because it's a continuation trade. I'm going to short 2 contracts. I shorted 2 of the perpetual futures on paper. I like the red candle. I like the lower high. If you're a little more advanced and you have confidence with the price action, right? Like I just put that trade on. I wasn't waiting for the entry. I just took it. Okay. Because I mean, look, lower high, lower low is likely. We'll see. We just talked about the big picture being bearish. So I'm synchronized with the daily chart. Doesn't mean that this is going to work, but if that asserts itself, this thing, at least I have more potential on this side. Okay. And I can use this trailing stop as my point of reference. So how much risk am I taking here? I'm not taking all of this risk, 250 points. I just entered it. I'm taking this risk right here, 171 points. That's reasonable on this time frame. So, oh, look, it's working a bit. Okay, my take profit is here. So 171 points, and I'm going for, let's see, 228 or whatever, something like that. So that's greater than 1 to 1, that's for sure. That's probably greater than 1.5 to 1. I don't know, I haven't done the math, but I'm giving it a try. All right, so you see how that's working. You see how that came together and what the thought process was behind that. Now, eventually this trailing stop will be at the entry price, which would have been break even if I had entered there. But I'm going to use the trailing stop and respect it. That's it. All right, now, are you following me so far on this? Do you see how this came together and how, I mean, I wouldn't expect you to do something like this with a 1-minute chart. These charts are hard. I'm able to do that because I recognize things very quickly. But you saw the rationale behind it, correct? And you saw how we arrived at this short idea, like where it's coming from. It wasn't that I just pulled up a chart and said, oh, it's a short, and just jumped in and took a trade just for the trade. We had done some homework on this. I knew the context. We had just talked about that daily candle looking horrendous. It's a short signal area. We're a general location for shorts. So shorts are favored here. Even if I jumped in and it went against me a bit, I should at least try to give it a little room or at least give it a chance. But again, that's what I have my trailing stop for. That defines my risk. Remember before I said if we got short as a swing trader, we have to take 3,000 points of risk? Is this 3,000 points of risk up here? No, this was like 500 points, something like less than 500 points of risk. That is how the TradeScanner Pro helps you control the risk. That's probably one of the greatest values. People right away, they want the magical tool. They think that they're going to have some kind of forecasting thing. I was just watching another video on YouTube because people advertise their scripts on there. And I'm looking at this thing. And again, they try to make it seem magical and it's going to capture all these big moves for you and blah, 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 blah. There is no such thing. This script, by the way, was free that they were promoting. But the point is, they want you to look at their other scripts so you pay for stuff. But the point is, none of these scripts can forecast the future because they're all based on standard formulas and things that are in the charting platform. You cannot forecast the future. But what you can do is find confirmation and then project potential objectives and risk based on previous price action. You can do that. And as long as it's defined well, like this, right, you know what's at risk here. I haven't seen too many scripts that do it like this. They usually have more vague ways of staying in and out. And I think they do that so that they can point after the fact, oh, this one made 10 billion points. And look how easy it was, right? I like to show more clarity and more definition on this. Anyway, but it's all laid out for you. It answers those questions, the main question, where do I get out? So let's look, this thing's trying to work against me. Let's see what happens here. All right, so if you're new and you want to try this thing out, let me explain real quick how this works. There's a link in the description. You can try the TradeScanner Pro out for free for 14 days. I highly encourage you to do that. If you don't want to type it, if you don't want to go to the link in the description, I'm going to show it to here. I'm going to type it here in the channel. Okay, and I'm going to show it to you here on the screen. That's the link. If you go to that link right there, that will take you to this. This is my website. And it tells you about the TradeScanner Pro, explains how it works, tells you about me, and then it takes you over here. This is where you sign up for it. It's a 14-day free trial. Now, please, if you are serious about this game and you really want to learn, I encourage you to sign up. If you're just one of these wannabes and you just want to buy a Ferrari tomorrow and you're looking for the magical tool, I do not encourage you to sign up. I do not want you using this because you're not going to appreciate it or understand it. It's a very valuable tool. And if you sign up for the yearly, it's $22.50 a month. If you pay the yearly up front, which is $270. If you sign up for the monthly, it's $30 a month. And that price is going higher because this thing is worth a lot more than that. So if you want to lock that price in, this is your chance, because once we start advancing this, because we're going to have overlays that go on top of this and stuff like that, I'm going to start raising the price. And you're not going to be able to get it for $30 a month. So lock it in while you can. Once you click on this, right, you click on this green button here. I just want to show you the sign up form. You get this form that looks like this. Make sure you fill in your TradingView username right here. If you forget to do that, we're not going to be able to send you the invite. So make sure you fill that in. Very important. Now, once you do all that and you submit this, you will get a welcome email. And the welcome email will explain to you that you will get the invite within an hour. It's usually less than an hour, but it should not be more than 1 hour. I mention this because people sign up and then within 2 seconds, I get an email saying, I never got the invite. I never got the invite. You have to have a little patience. Like if you lack that much patience, don't sign up. You're never going to get anywhere. You're going to fail. I'm just trying to be helpful here to you. So that's how you sign up for it. That's the deal, right? Again, I only want people that are serious about this and that are passionate about the market. I don't want these wannabes. There's too many TikTok heads out there that are just wannabes, and they think, oh, I'm going to be a trader. Yeah, I'm going to buy a Ferrari, and I'm going to have a hot girlfriend and all that. I don't want those type of people, because you know what? For one, they don't understand what they're dealing with here, and nor do they care. They just want to make quick money. And if that's the case, go sell shoes. You're not going to make quick money in this game. This is a very hard game. And the reason why this game is so hard is because we are constantly met with misinformation, constantly. 99% of the information that we consume publicly is misinformation. If we had quality information, this game would be a lot easier. But trying to find quality information is the hard part, especially since we go into this automatically thinking that everything we're consuming is good. Like we know, it's price chart, okay, right? We don't see what's going on behind these candles. We can't see the orders, who's got what, who's buying what, who's selling what. They have these fake order books where they show action going back and forth, but you can't make sense of it. It's illegible. You don't know who's got what. So we don't know who we're up against or what we're up against. It's like we're a Pee Wee League quarterback and we're playing in an NFL game with a blindfold on. So we can't even see that NFL defense that's going to come for a Pee Wee League quarterback. He's not even in high school yet. He doesn't realize he's up against a professional defense. That is the retail trader playing this game. You don't know what you're up against. So you need tools to at least help, for one, define your risk. Like the easiest thing we can do and control is our risk. So you want something to define your risk and at least simplify your decision-making process. One of the reasons why we can't win, like I said, bad information and that leads to confusion. So we have all this, we don't know all these decisions we have to make. We don't know where to start. It becomes overwhelming. Where do I get in? Where do I get out? How do I trail the stop? How should I let this thing run? Why should I let this thing run? All these other things. And the goal of the TradeScanner Pro is to help simplify that process. You come up with your premise, and then you wait for the confirmation, which is what this is. Okay, this order suggestion here is a form of confirmation. It gives you your entry, your stop loss, your take profit, and it may go beyond the take profit. Notice the trailing stop is now at break even. If this thing continues lower, like I said before, this thing has potential to pull back dramatically based on that daily chart. So this thing may pull back, maybe not all right now, but over the next few days. Being on a 2-minute chart, I'm not planning to hold this trade a couple of days. That would be more appropriate for a 30-minute chart or an hourly chart. The 2-minute chart, you know, it's an intraday trade. Most likely you're going to get out the same day. So eventually this thing's going to pop up and it's going to tap out the trailing stop, right? And you captured a 2-minute trade. The advantage to doing something like that, again, is everything is well defined for you and the magnitude is relevant to the time frame you're on. So a 2-minute chart, I'm not taking massive risk. On a daily chart, I'm taking 3,000 or 4,000 points of risk. That's ridiculous. People don't even realize they're doing that. On a 2-minute chart, I'm taking 500 points of risk, less. And that risk is constantly getting smaller when you use a trailing stop. Okay, so I think I've illustrated that well enough. Hey, Peter, good to see you. How you making out? I know you tried out, you signed up for the TradeScanner Pro recently. How you been making out with it? So you guys have any questions about this? So look, I mean, this trade is just fluctuating around. It's not really doing a whole lot. It's reluctant. But what time is it? It's 4:30 in the afternoon. What can I expect at 4:30 in the afternoon? Time of day is important. If you notice, what time was the big move today? Look at this is the big moves in the market. Look at this. Noon. Look at this. What time was this? Between 9:30 and 10 o'clock. Look at this. 9:30. What a surprise. Right? That's when all the volume is because it coincides with the stock market. Notice the candle movements here. Look how narrow and small they are because there's no volume. This is not the stock market open. So you have to keep that in mind. Cool. Glad to hear it. All right. So any questions? Any questions about this? Do I have any new people that are going to sign up for the TradeScanner Pro? Any serious, committed people that really want to give this a proper try? You're going to have to try this thing you have 2 weeks to try it. And I suggest you paper trade on those 2 weeks, at least 1 week. And if you're going to take any real trades, take them small because you're going to have losing trades. But like Stian said in his example, don't let them blind you. Because if I'm reaching these profit objectives, this is eating up a portion of those losing trades. Now, real quick, I just want to show you, you can change your reward risk ratio. Right here, it's 1.5. You could see it right there. It says reward ratio. You could change that. You can make it 2-to-1, for example. And then it'll move your take profit. It'll move your profit objective twice as much of what your risk is. In a situation like this, where I'm anticipating a greater pullback based on the larger time frame, that might be appropriate for a situation where, maybe I should put this at 2-to-1 because this thing has potential to reach 2-to-1 because we have a sell signal at a major resistance area on the big picture. So there's a lot more potential. So when I can gauge greater potential, perhaps I can move my take profit if I want. You don't have to, but you have that choice. Again, we gave all this flexibility for more advanced traders that like to customize things. If you're a beginner, you don't need to change anything. Make sense? Okay, cool. Any other questions? Any questions? I think, you know what? I think I have like maybe 5 people watching me here and everyone else is a bot. I think I have I know UTXO is a bot. He told me once that he was a bot, so I believe him. But I think everyone else here, I think I have like 60 bots and like 10 guys here watching, actually participating. Anyway, any other questions before I wrap this up? So let's take a look at how this trade worked out here. Mostly I trade 15 to 30 minute time. Okay, good, Peter. That's very good. That's what you should be in. Working on 1 minute is hard. I spend a lot of time on small time frames. It's hard. And it's hard because things change fast. All right, I'm getting out of this. $150. Okay, let's buy this thing back. 2 contracts, bought them back. All right, it's like $150. Not bad on paper. Let's make that clear on paper. You know, and I took an entry here, which was not the entry price. And this trade was called all the way back here. So this was at 2:30 basically. The trade was called at 2:30 in the afternoon. This was 2 hours ago on a 2-minute chart. And I had to sit, if I had taken it at that time, I had to sit in this thing for 2 hours, almost got stopped out over here, right? And then in 2 hours, I made some money if I had to do all that. But instead, we pulled up the trade over here, right? The lower high was established. My trailing stop had advanced. And I said, you know what? I could still take this. I took the trade and I captured a little. So there are variations. You don't have to follow it exactly. It's sort of like a point of reference. But what I just showed you here is more advanced. You have to recognize a lot of things. And of course, this could have completely went wrong on me. Okay. Works for me here. Cool. Yeah. So again, to sum this up, again, if you're a beginner, consider the 15-minute charts or higher and try to stick with trend mode. There are plenty of situations where you should be using counter trend mode. I showed you a couple of examples here, but I don't want to focus on that because I find that it's confusing for beginners. And I want you to have a good experience. I want you to have a positive experience, and I want you to see how this can change your whole process when coming to the market and trying to figure out what to do. That was the whole point of why I wanted to develop a tool like this, was to help simplify the process and create a tool that's actually valuable, a tool that actually can pay for itself, potentially, as opposed to, you know, a Netflix subscription, which will never pay for itself. Even if you watch 1 million documentaries, it will never pay for itself. I'm sorry, lad. I'm sorry. All right, you guys. All right, enough jokes for today. Okay, I don't see any questions. So make sure you check out the website. If you want to reach me, you can send me an email, mark@markpmarkets.com. You can message me on Discord. You could send me an inbox here on TradingView. I usually get to these in a decent amount of time. If, for whatever reason, you receive a message from me first, and I'm asking you to pay me something or whatever, it's not me. I don't initiate the messages. So please understand, I don't want you to be scammed. Report that person, block that person, and put that, we have a scammer channel. You can report that person in there as well so that other people are aware that a scammer is running around trying to rob people. All right. I don't like people getting robbed. So just be aware of that. All right, people. So other than that, I think that's it here. Okay, cool. So guys, thanks for your time today. I hope you got something out of it. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.